It's very hard for us to really understand why investors are kind of, as a group, think equities are overvalued. If you look across the world, US, Europe ex-UK, UK, EM, Japan, as a kind of comparison to their average since 1990, they're either right at, so the US is just a tad over, sitting 18 PE on the S&P. All other regions around the world significantly cheaper on a PE basis than their historical average going back to 1990. So that's kind of an amazing comparison. It's driven by profits. So the S&P 500 continues to advance because profits continue to advance. Companies are making a ton of cash and making a ton of capital investments into their future. Yeah, absolutely. That's a great question. And I think it's really pertinent to today's investor, considering almost all portfolios continue to be dominated by modern portfolio theory, right? So you've got your X% in the US markets, X% in your UK and European markets, X% in Asia and emerging markets. Whereas a thematic investment can allow you to better pinpoint your precise investments. For example, Amazon is 4% or so of the S&P 500. It might be 10% in an internet index, for example. And so the investor who's investing for future growth, believing the internet's going to continue to dominate, will get a larger exposure to Amazon than, say, their 10% exposure to the S&P 500, which is 4%, so 40 basis points to Amazon. Speaking of themes is where we really see the true growth in the markets because it's pan-sector. It's not tech, it's not consumer discretionary, it's the theme itself. And if you isolate just a theme, to give a really good example, cloud computing. So cloud computing back in 2010, total revenues in cloud were about 20 billion. End of last year, Microsoft has about 20 billion in cloud revenues, and Amazon Web Services has about 25 billion in cloud revenues, just on their own. The total cloud market's grown from about 20 billion to 186 in just 9 years. It's tremendous as we see more individuals, companies, charities, and governments moving their money to the cloud. And the best example of this is this JEDI contract from the US government, a winner-take-all $10 billion contract. Two finalists, Microsoft and Amazon. Even at $10 billion, it's still half of all of Microsoft's revenues, or just under half of Amazon's. It's just an incredible market area of growth. And when you're investing thematically, you can really pinpoint specifically what you're saying, which brings on both the specific risks, but it also brings on the specific upside. We get that a lot. Themes seem like they might be higher beta. Themes seem like they might be overvalued because sometimes their price to earnings ratios might be a little bit elevated. However, if you're comparing, the US to Europe on a PE basis, it forsakes the earnings expectation or the earnings growth expectation gap. So you might be expecting more growth from Amazon than, say, Macy's. Therefore, Macy's is going to have a PE in the single digits and Amazon's going to be up in the 80s. What's incredible is you just take the FANG stocks. Even at $1 trillion market cap, Amazon's PE is 85% lower than what it was just 5 years ago. And if you chart the PE ratio of all the FANG stocks and something like the Dow Jones Internet Index over the last 5 years, you just continue to see this cascade lower. When Facebook came out, when they IPO'd about 6 years ago, they were priced to perfection, right? They were priced that they were going to monetize all social media. And they kind of did in many ways. And now their PE has gone from over 100 into the 30s. It actually dipped down to 19 at the beginning of this year. Then they released their earnings. And when investors receive actual information rather than trading on fear, you've seen these stocks rise back up. Yes, absolutely. Two examples right off the bat. Currency exposure and curve risk, or with all this kind of conversation on inverted yield curves, having a fund that just invests in the steepest curves in the world seems like something that would better express somebody's either risk worries or upside movement. I think the idea here is that thematic investments across the board continue to provide a better tool to better express an investor's actual investment beliefs.